now time for FOMO. And today we are looking at Palo Alto Networks, which is down about 2.8% despite the overall market strength. So here to hopefully break down some of the recent price activity as well as what we can expect from their earnings next week, I'd like to welcome in Diane King Hall, senior markets correspondent for the network. So Diane, nothing but analyst praise that I've actually seen as of late in this name. I mean, and then there's some mixed feedback, but all in all, this is a name that moves on the back of earnings. So I'm actually excited for this report on Monday.
Yeah, it's certainly in focus today, especially with the earnings coming up on Monday. Let's talk expectations first before we get into some of the analysts' commentary. So the expectation is for Palo Alto to report adjusted earnings to come in at $1.41 a share. That would be a roughly 2% decline year over year. Revenue is expected to top $2.1 billion, which would be up from the same time a year ago. A year earlier, that revenue came in at $1.95 billion. So again, that would be an increase. And although the stock is under a little bit of pressure today, it is up double digits year to date, close to around what the S&P 500 is year to date. And especially when you compare that to, for instance, CrowdStrike, which had been under pressure ever since that major outage that occurred on July 19th. And when you compare that stock performance to Palo Alto has certainly gained some steam. And you mentioned some of the analyst commentary. Evercore ISI has Palo Alto on its tactical underperform list ahead of next week's earnings. It did keep an outperform rating, though, on the share. So when you speak to that, kind of a little bit of mixed view on that, they said that, just the survey data they have was mixed this quarter. And they talked about some lack of conviction from investor conversations, but the elevated sentiment there. So it looks like they're kind of couching their expectations for Palo Alto. Now, Baird, though, has an outperform rating on Palo Alto, and they've raised their price target to $375 a share. They previously had a price target of $360 a share.
Diane, do you kind of interpret this Evercore note as, hey, in the near term, earnings might send this stock lower, but long term, we like this stock, so we're not changing that long term view? Perhaps like wait till the other side of earnings if you want to buy this because there could be a better chance?
That's what it looks like to me, and it looks like kind of a don't throw the baby out with the bathwater kind of note when you look at this Evercore ISI. And Jenny made the point about there's some little bit of mixed or cloudy commentary around it. You have, of course, the Baird being supportive in a bullish thesis, Evercore being, we're going to straddle this on both sides of the equation. But you had JP Morgan Chase out earlier this week maintaining their overweight rating on Palo Alto, and they boosted their price target to $365 a share. They previously had a price target of $340 a share. What their view is that they see some improvement in terms of consolidated gross margins. That's their view, and they see that because of just an easing supply chain for Palo Alto. And then some of the supportive analyst commentary, Alex, has to do with obviously Palo Alto being a beneficiary of that CrowdStrike outage and capturing some of the client base that CrowdStrike could have potentially lost or lose as a result of that massive outage. They see that as potentially Palo Alto being able to pick up some of that. The other thing we'll want to hear more about is Palo Alto is also trying this new bundling strategy. So we'll want to hear more about that. Now, Wells Fargo had some similar thinking in terms of Evercore ISI, whereas like they seem to be balancing both views on that. They said that the print should be fine, though the guidance could modestly disappoint. Wedbush on the more bullish side of this equation, saying Palo Alto continues to be, quote, one of our favorite cybersecurity names to own over the next year, despite some near-term issues related to the platformization strategy that it's deploying.
The platformization strategy day, and I've read that a few times today, and that's like the analyst buzzword that I think is hopefully seeing signs of improvement, but they still have their own company-specific issues, even outside of like the potential demand they could see from CrowdStrike. I feel like there's a lot riding on that, but they have their own growth they have to worry about. So great insight, as always, a great breakdown on Palo Alto Networks ahead of Monday earnings day. Diane King Hall, senior markets correspondent.